What's up guys, Ramsay Rippers from Kane Capital here, coming to you with a brand new series of YouTube videos. We're starting today, the first episode of So You Want to Trade.
The trade? The trade.
So here's the deal. I'm going to start from the beginning and going to go in chronological order, talking about the topics and everything that you need to know with respect to starting your journey as a trader. We'll start off with the basics, like what a candlestick is, then get into things like charting patterns, indicators, key levels, and different trading strategies that I still use till this very day. Without further ado, let's get right into it. All right, so today I want to talk a little bit about what a candlestick is and what it means to the overall security being questioned and the chart in review. So before we get started, quick disclaimer, where I am starting for these videos on a conceptual basis is based off of the assumption that you already have a brokerage account and you have a basic fundamental understanding on what the stock market is. So eventually, I probably will do a video on getting started with your own brokerage and the fundamentals of what the stock market is, but as of right now, today, this is where I'll be starting. So there are many different ways to review a chart. Some people like to review them with just like a line graph. I know a lot of people also use the Heikin-Ashi charts, the Heikin-Ashi candlesticks. I'm not sure if I'm saying that correctly. For myself and a lot of other traders, I find that utilizing candlesticks are the best way, especially for day trading, to read a chart and truly understand what is going on intraday and on longer time frames. So for those that are wondering what exactly a candlestick is, it is a type of price chart used in technical analysis that displays the high, the low, the open and closing prices of a security for that specific period. So if it's a green candle, that means that during that specific period that you're analyzing, the security went up in price. And if it is a red candle, it means that the security went down in price. So the wide part of the candlestick on the green candlestick pictured right here where you see open to close up top is called the real body. And that basically tells investors whether the closing price was higher or lower than the opening price, right? So once again, if the stock went up in price, as we can see right here, we opened lower than we closed, it's going to be green. And on the other hand, where you see the red candle to my right, if we closed lower than when we opened, it is going to be a red real body. Real quick, a fun fact, little history check. Candlesticks actually originated from Japanese rice merchants and traders to track market prices and daily momentum hundreds of years before becoming popular in the United States. So now we covered the opening, the close, and the real bodies. Now let's get into the wicks. So a candlestick's wick is a line that's found on the chart that's used to indicate where the price of a stock has fluctuated relative to the opening and closing prices, right? The opening and closing prices being that real body. Essentially, these wicks just show the high and the low prices at which the security has traded over the specific period that you're looking on the candlestick. Once again, candlesticks can be ranged on all different time frames from the 1 minute, the 2 minute, the 5 minute, 10, 15, hourly, and daily. So for example, right here, we can see the low of the green candle. This bottom wick from where the open to the low is, that's our candlestick wick. That tells us what the low is. As so, it tells us where the high is as well on both of these specific candles. Not all candlesticks are going to look exactly like this, right? There's going to be a lot of different types of candlestick patterns. For example, this is just a normal candle, a candlestick that we're looking at right here. There's different types of candlesticks called hammers, inverted hammers, bullish engulfing candles, hanging man candles, shooting star candles, tweezer tops, tweezer bottoms. We're going to get into all of that as this series progresses. But for now, today was just to talk about the basics of the candlestick charts. I hope you guys enjoyed this video, took some value from it. If you did, please like, comment, subscribe, share the video with anyone that you know who is looking to get into trading. It really helps out the channel. We'll be back next week for a new video.